and our conservative modelling does mean that the group can fund its interests in the hotel, certainly for the next 18 months, with limited activity from it. And if we move now into the next slide, which is probably the financial, a couple of slides here on sort of financials, and I'll let Scott lead in now. Our overarching comment here would be, you had a lot of detail in the 6-month interim results, so we decided there was no point in replicating information you will have read. So Scott will summarise it here, and more importantly, take you out the other side over the next couple of years.
All right, good afternoon, everyone, and thanks, Mark, for the introduction. I won't dwell too much on the past because it's unfortunately become largely irrelevant, but I guess just some key takeaways from the slide and what you may have read already in the interim report, but it's really that momentum we built in the past couple of years around a sustainable, sort of recurring revenue base through passenger growth in the airport business, through our property portfolio that had continued really well for the first half of the year. Obviously without COVID-19, we expect it to continue through the full year and beyond. Just some points around property, obviously talking some big numbers around land sales. I guess that they are land sales that have been contemplated under our 10-year plan. The land sales in the pipeline, it's not something that we've done as a knee-jerk reaction or sort of a fire sale type arrangement just to get some cash for the next couple of years. These are the land we're selling is sort of surplus to aeronautical requirements. In fact, much of it's actually physically separated from the airport through a gully system, so we're not compromising any core asset sort of future capability by selling this land. It very much is land that was surplus to the airport, so it's why it's been sold off at the time it has been. Just with the hotel, obviously it is a new investment for us, a new industry we've invested in. Really pleased with the early trading performance. And probably pleasing that we didn't, other than the initial money to do the property up, attend to some deferred maintenance and things, it's actually traded cash flow positive. It hasn't always been profitable with depreciation and things, but in fact, we're actually able to repay some debt. And the early vital signs around occupancy and room rate have been certainly in line with the expectation. And again, kind of right up until February, March, it was really just coming into its stride around the conference centre and the food and beverage offerings. So I think it was looking really positive, and hopefully on the other side, that's the momentum we can leverage off again. So probably just look to the future now and just move to the next slide. And then the following three that are presented in the draft statement of intent you've received. And I think important to focus on EBITDA because that's sort of a cash flow metric for us, which in the short term is not necessarily linear with the investment we make into assets. So obviously seeing a reasonably significant decline in the next in this calendar year, with across the business certainly going to suffer. And that's, as we see in the sort of early 6 months between December 20 and June next year, that's the effect of this large land sale taking effect. And then as the business kind of gets back on its feet,